Hi there, Bill Rogers and Lauren Hall here from Loan Market Edge, coming to you with another weekly wrap up. Obviously, Superhero Friday here at the office. Maybe just me. But look, another big week. So a couple of things we wanted to run through tonight with you. Just talk about some of the changes and updates to policies with the banks we've seen over the last week. Talk about some of the positive government changes and post-COVID economic recovery initiatives that are proposed, which is really exciting. What's happening with interest rates, really topical especially over the last couple of weeks, and share some wins with you guys, with our clients. So the first one, touching base around the changes and updates that's happening with some of the policies with the banks at the moment. Interesting, we've seen one of the majors come out and make a change that if you're a self-employed client or has any level of self-employed income as part of your application, they actually now require you to have a 20% deposit. So very similar to some of the stuff we saw sort of post-GFC on its way out. But interestingly with that, there's only one of the majors that's come out. So there's still three that are more than comfortable with it. And obviously all of the, we've got 60 plus lenders, but interesting to see that shift from them. The JobKeeper, really topical after our conversation last week when we talked through the JobKeeper and the JobSeeker and what all that looks like, is we've had two lenders this week come out and reference towards allowing people or allowing clients to use their pre-COVID income as part of the application for servicing. So where it was A, not accepted at all, B, they would just accept JobKeeper, these guys are now saying that they will take what you were earning pre-COVID, obviously some additional verification, potentially a letter from your employer, etc., to help verify what that return to work income will look like. But great news, as we start to wind out of this, really nice to see some flex around these policies for people that are potentially in that position, earning JobKeeper, still working and being able to use their full income that would normally apply. So that's a really exciting income there. Update, some changes around the Medico space as well, which has been really interesting. But again, the appetite between the banks seems to shift between this. We've got some that don't have a problem with it, others that do. So if you think that might be applicable or something you're interested in around the professional space or Medico practitioners as well, get in touch. Obviously, love to talk through that. Want to talk a little bit about those government changes?
Yeah. So I saw a great article this week that was released by the Property Council of Australia. So they are looking at a 7-point plan for economic recovery. Really interesting to read and see that property is Australia's biggest employer. It accounts for 13% of our gross domestic product and it employs 1.4 million people. So from the federal government's point of view, it plays a really crucial part in seeing the economy and how it recovers post-COVID. So I'll just run you through a couple of the tidbits that I saw. There's 7 in total, and you can jump onto our Facebook page to find the link to the full article. But these are a couple that I saw straight out and really hit me and I thought were very, very exciting. So the first one was around a kickstart for housing construction, understanding how important that is and stimulating the economy as well. And the government's talking about maybe a $50,000 kickstart for first home buyers around construction, which is amazing. And that's potentially on top of any of the state offers or what the state government offers at the moment. So really, really cool. The other one that I liked was that currently the cost of buying or building a new home, about 25% of that is accounted for government costs. So a lot of sort of dead money. I don't know if I can say that, but I'm going to say it. So there's discussion around maybe reducing some of those costs or bringing in additional concessions, which again, amazing, helps people get into property quicker and obviously reduce those overheads and those costs. So really, really exciting stuff there. Really pleased to see what the government is looking to release. So great stuff for post-COVID.
Yeah, definitely jump on and check that out. Absolutely worth a read, whatever position you're in. It's exciting outcomes that will come out of that, hopefully. The other one we wanted to talk about was around rates, and super topical as always with what's happening, but we spoke over the last couple of weeks about rate lock and what's happening with the rates and where is everything sitting, and interestingly enough, we've seen one of the majors lift rates today, pretty much effective immediately, which is always nice of them to do that. So effective immediately, those rates have been increased. But then hearing some conversations that potentially one of the other majors might look to reduce some fixed interest rates and pass on some more margin in the investment space. So it's just interesting how that appetite, I guess, seems to shift
it's different
between the banks. But we did have some other exciting news I saw come through this week.
I feel like I get to give all the exciting news, which is great. So absolutely. So a lot of the banks will offer what's called a cashback to potentially refinance and secure a new business. So that's not uncommon, and these have been going around for a little while. We've had a new update this week, which is really focused around rewarding our frontline heroes, which was really cool. So the normal cashback might be $2,000 to $3,000, but they're actually going to throw in an extra $1,000 on top. So that includes our teachers, our nurses, emergency services. So an extra $1,000 on top of the $2,000 or $3,000 cashback. So potentially $4,000 there. So really, really cool to see. We thought that was a really nice initiative. So if you are a teacher, a nurse, or someone in emergency services, or you know someone, definitely get in touch. Some free money there to grab. We're always keen for some free money. But really nice to see that the frontline heroes are being recognised, and this is really a special incentive for them.
Yeah, cool. So obviously a lot of those are temporary. They are a little bit limited in the time frame that they're around. So yeah, lots of encouragement. Definitely get in touch. We actually seen one of the bigger cashback offers end in a couple of days at the end of this month. You know, so great to see something like that come back in to replace that from another lender, which is really exciting. The other one was just talking a little bit about some wins, like we always love to do, and there's just so much of it, you know, week and week with our clients. But there's always a couple of standouts in there which we're really excited about. So we thought we'd share one this week. Was an investment refinance. So we had a client that was referred from an existing client that we just helped out. Had a $460,000 loan on a property. Coming off a 5-year interest only term, an interest rate of 4.58, again on interest only, so none of that debt being reduced over that period of time. We've been able to refinance that client across to another lender, find a 3-year fixed rate at 2.59%. onto principal and interest. So their goal was always to start to reduce that debt. So we've gone from a repayment of $405 a week, paying just interest to the bank, not reducing that debt at all, to a repayment of $425 a week. So for only $20 a week, we're now reducing the principal off that loan, and we're also able to secure these guys a $4,000 refinance rebate,
Awesome.
Which covers that $20 and some for quite some period. So it's just a really exciting time for people to be reviewing this. For a lot of clients coming off interest only, if you're an investor and have had a product, and that's always been the strategy, and a lot of those clients can't renew that interest only with their existing lender, so they're forced to go to P&I. But on P&I potentially those repayments are extremely higher than what they're used to paying, so there's some stress on the household and on the budget. So challenges around that, a great conversation with those guys this week and a really positive outcome. So look, as always, great to chat, but lots of encouragement for any of those topics. If yourselves or friends, family, work colleagues, we're here to help. Our goal at the moment is really to help as many people as we possibly can through this. So love to catch up for a chat. Get us on the socials, send us an email. We'll do our Zoom, our Skypes, our phones, our FaceTimes. It's all happening here at the moment. So look forward to keeping in touch with you guys, and as always, just get in touch.
Awesome. Have a great weekend. Until next week.
Cheers.